What is up, guys? So this is going to be a trading course for complete beginners. And firstly, I just want to start by talking about trading in general and what it is and how you can make money with trading, right? Firstly, trading is not a get rich quick scheme, so um, you're not gonna put in 1 lakh rupees and make 10 lakh rupees out of that, unless you are the top 0.01% trader, right? And in order for anyone to get that, like any skill, it takes time. You have to be very much in tune with the market, completely understanding what the price is doing, and you also need to have absolute control over your emotions, because trading mostly is a business where you have to control your emotions and stick to the plan. And one can only do that when we have a proof of concept, right? When we know that we can make money. So your confidence and your technical analysis, your ability to understand the markets, the charts, play a big both are very important, right? So firstly, let's understand what the market is. So, and why do all these traders are looking at charts? Well, traders are looking at charts because on a chart we can see clearly what the price has done over a big amount of time or a small amount of time. Now, in this video later, we'll zoom on to the charts. We'll look at the charts and try to understand what the price is telling us. Um, but essentially, what a market is it's a place where an auction is happening for any specific asset. Can be gold, can be Bitcoin, can be silver, can be crude oil, can be price of a stock, can be price of dollar, can be currency pairs, dollar against pound and stuff. There's a lot of assets that are actively traded on the stock market, and mostly what I do specifically, or where I got success, was algorithmic trading, where I design and deploy strategies. So basically, trading is a business, and you have to always keep on finding an advantage or an edge to stay ahead of the market, because it is a business where you have to take a risk of $10 or $100, whatever you want to risk per trade to make. So trading is a zero sum game, right? That means if I am making money today, that means someone else has lost that money. If I've made $100 today, that means either a big player lost his $100, and maybe a big player lost $1,000, and I took $100 from him, or maybe smaller few $10 people, a few people lost $10, and I took money from 10 such people, and I got my $100. So in trading, we are not creating value for everyone. Value, which is money, it's been transferred from one hand to the other hand, depending on if you're trading on a smaller time frame or on a bigger time frame, right? So now I'm in my career where I've got strategies, non-directional strategies in Bitcoin, which are making me money. Then I've got a directional strategy, which is a buying strategy in Bank Nifty, which is a financial index of India. And I am currently working on deploying a strategy or an algorithm which basically trades in gold. And the results so far of this gold strategy look very good. And maybe this week we'll put some money in a separate account and just do some testing in the live markets, because in a live market, any strategy can perform differently than the data analysis or the back testing. But I don't want to confuse you guys more. Firstly, even if you want to become an algorithmic trader, first you have to understand what the market is, what charts are. It's the foundational step. If you skip that step, then in future, even if you buy someone's algo and deploy money on it, you won't have a deeper understanding of what is actually happening, or why your stop losses were hit on a certain day and why you were profitable on a different day, right? So this is a lifestyle. You have to love it, you have to live it. The more you are in tune with the market, the more it's like it's a business, it's a profession, it's a lifestyle, it's not for everyone, I understand that. But this video series is specifically for people who want to learn it for free, or um, who want that I share my experience or how I got here. So this is purely for educational purposes. And yes, if you give it time and if you're dedicated to learning, first you have to be focused and dedicated on learning. You can't think about earning money. It took me 2 years to become profitable, for me to be able to do this full time, and it's a journey. It's not an easy journey, because it's psychological. We are afraid to lose money. As humans, losing money is very painful. But in trading, if you want to make big money, you have to risk big. And even if you lose that money, you still have to be okay and be able to take that loss and show up the next day and take a different trade again. So my point is that when you have losses, when you're trying to, when your account is growing and then you have a loss, it can affect your confidence, it can affect your psychology. And I understand why it is hard, because most of people will just give up. But I feel like if you focus on becoming a professional trader, what I mean by a professional trader is someone who is trained properly, who trades with discipline. So essentially, someone a bank or an institution or an hedge fund would hire to trade their money. So what are these guys doing? How are these guys trading? And why, you should ask yourself the question, why only 1% or 2% of the people in trading are making most of the money, right? And there is a reason for it, because all the 90% of the people who are losing money in the markets, their wealth, their money is going to the top 2%, 3% people in the market. They are the ones who are taking your money, right? And the reason, my understanding, so I've had a few mentors, I've spent money so that I don't waste my time learning everything from YouTube. So I have bought courses from different people teaching different things, because in the market there are thousands, literally thousands of ways you can make money in the financial markets. First, understand that, right? And the more you do this, you will find things that work for you or you like doing. So for example, I like options. My strategies in Bitcoin, my option selling strategies in Bitcoins, they are my bread and butter. They consistently make me money, and because of that, I'm based on those profits. I'm able to, live comfortably and not be stressed all the time about money. And once you have certain profits, it becomes very easy to take risk on that profit and grow in this journey. And it is a journey. You are probably going to lose more money learning this in the first 6 months, the first year, because Trading is a very practical thing actually, and it is also a very lonely profession, because no one else is going to understand what you feel. No one else is going to understand what it feels like to lose, what it feels like to win. So, and even if you share this feeling with your friends and family, they won't understand, because it's a very subjective experience. It very much depends on the individual. But if you learn from the right things and from the right teachers, and you are a disciplined trader, it is very important to be a disciplined trader. You can't. So I was talking about professional traders, right? Professional traders are professional because they are emotionless traders. So in a hedge fund or in a bank, what basically a financial institution does is they have got a, multiple teams of traders, and every trader has got, they are given a certain amount, whatever those amounts are big because banks have a lot of money. So let's say a very experienced trader with 15 to 20 years of example working for HDFC Bank, say he manages 100 crores INR, Indian rupees, and 100 crores is nothing for HDFC Bank, right? And this trader is good. So there are systems in place in a professional environment where these guys literally on every, say, intraday trade they take, there are 250 there are 250 trading days, roughly approximately in a year, right? So out of 250 trading days, 200 days these guys are profitable, and they lose money only on 40 to 50 days in a year, which is fine. Like, no one has, we don't want 100% win rate, right? Trading is a game of probabilities. We are speculating, or we are betting money on a certain idea or thought process that we have as to where the price is gonna go, say for gold or for Bitcoin, whatever you trade, whatever asset you wanna look at. And it's a speculation. We are basically, the market is showing us some signs, and based on those signs, we are making a prediction by betting our money on it, by buying that. Say right now when I'm making this video, I am very bullish. I think gold is in a very strong uptrend, and it's gonna keep going up, because that's what the market is showing us. The market so far hasn't shown us any bearish signs. So the most amount of money that you will ever make in trading is when you catch these trends. So gold has been trending in an uptrend for the last couple of weeks, and I know traders who bought at the exact bottom of this trend when this uptrend started, right? So because they were able to buy at the exact bottom and hold until the top, and we get leverage. So even if you say, what leverage means is that, say you have 10,000 rupees in your trading account and you get a leverage of 200x, that means that your 10,000 rupees becomes, multiply that by 200. I think 10,000 multiplied by 200 is 20 lakhs, I want to say. I'm not sure if it's, yeah, 10,000 divided by 200 is 20 lakhs. So using leverage, using with just 10,000 rupees and 20x leverage from the broker, you can buy a position worth of 20 lakh rupees. So when you have a profit or loss, it will be according to not 10,000 rupees but 20 lakh rupees. That is what leverage does. So leverage can be a good thing if used correctly, with proper risk management, with proper stop loss. Say so for example, for a trader like me, I feel comfortable in gold and Bitcoin, which are very volatile assets. I feel comfortable losing 3,000 or 4,000 rupees on every trade. So even though I get leverage of 200x and I have only 10,000 rupees in my trading account, what that means is when my loss exceeds 3,000 or 4,000 rupees, I would like to close that position, because at that point probably I have entered into a wrong trade or at the wrong time. So um, yes, you can enter, your direction can be correct, but if you enter in the wrong time on a shorter time frame, you can still face big losses, because um, you like depends if that was an intraday trade or you were trying to scalp, or you were going to hold it for long term. So for that means swing trading, and depending on that, your stop loss, and that will define your position size. Position size means how much quantity should you have bought or you should have sold, right? So as I said, trading is a business of probability, and the big banks and the hedge funds and the financial institutions, they are in profit every year on big amounts, on thousands of crores of rupees, or on millions of dollars, because there are systems in place. So they risk 0.25 to 0.3% of their entire capital on one trade. And what I mean by risk is they're willing to lose only that much. And if a trader in a hedge fund loses more than 1% of his trading capital, so not the entire trading capital of the bank, but the trading capital allotted to the particular trader. So in our case, our trader at HDFC Bank was allotted 100 crore rupees to trade with, right? And say he takes 3 trades in a day, which had a risk tolerance of 0.3% for a single trade. So if he loses 3 trades in a row, that is 0.9%, which is almost 1%. So if the trader loses 1% in a day of his 100 crore, which is 1 crore rupees, guys, if I had 100 crores rupees to trade with, and it's very easy to face a loss of 1% depending on how much you're risking per trade. So if that happens, the trader, the machine or his system, his laptop will not allow him to trade more for that specific day. Yes, professional traders have systems and softwares in place which are called risk management tools, which there are also risk managers, where that person's job is making sure that no one in the company or no team in a company is risking more than they are supposed to. Because in trading, if you're trading your own money, I'm not talking about funded accounts, if you're trading your own money, it is the first thing, your first job is to protect your capital. That is your first job as a trader, to know, to not lose big money in one day. The same, when someone is teaching you to learn martial arts or fighting or boxing, that's the first thing that they tell you, is that you have to keep your hands up at all the time. You have to protect yourself. Your first job is to not get hit on the fucking chin, not get hurt in the face, right? That's your first job. Because say you lose 1% or 2% on a particular day, it's fine. You still have 98% of your capital left to trade tomorrow. And if you have money in hand, you can always make that money back. And that's what I was talking about, confidence and proof of concept. Right now I'm at that point where I already know that I am a profitable trader. Building this trust, confidence and self-image in yourself is important, and it takes time. I was able to feel this confident almost after 2 years, and I was only able to do that because of algorithmic trading. Because a computer is emotionless. Like my strategies, my Bitcoin strategies, they don't lose more than 1% or 2% within a day, and their win rate is very high. So that means in a week or in a month, I am mostly in green. I am not losing big money in a month. And their drawdown, which is like the maximum loss which you can face, is it's very low. It's like 5% or 10% loss in a maximum. And after that, those strategies will start, they will recover from the loss. And I know that because I've looked at I've done the back testing. I've looked at the last 5 year data. I've done data analysis on those strategies, on the past market conditions, right? So this is how the professionals do it. And this video has become quite a long, but I was very much, I shared my honest experience and how you should start thinking as a professional trader if you want to make a career out of this. This video is 20 minutes long now. I will make a next video where we will look at some charts and how candles are formed and what charts look like and what the candles mean on the chart. But see you in the next one, guys. Bye bye.